Okay, good afternoon, ladies and gentlemen, and welcome back to the second half of today's program. I hope you've enjoyed your lunch and its food has been good so far. This session, this next session focuses on female investors and financial leaders who are leading high-growth businesses in the male-dominated spaces of Wall Street, venture cap, and impact investing. We have introduced this session because it's not often that we get to see and also hear how women leaders overcome formidable odds in their careers because of gender bias and also because of societal norms, how they basically get around becoming leaders in their own right and field. So in this session, we would like to basically introduce a panel of speakers. All of the speakers have had a lot of successes in the areas of finance. And I'm very pleased to invite Sharon Sim from Purpose Venture Capital, Serena Wong from Kamet Capital Partners onto stage. And the session will be moderated by my dear colleague Audrey Lam, who she herself heads the investment banking team at Maybank Securities Singapore. Ladies, could I please invite you to stage, please?
Thank you, Seng Yao. Okay, good afternoon. Hope everyone is having a good lunch and even better conversations. Looks like we have a good, diverse group of audience. Sharon, Serena. So shall we start?
Sure.
Let's start with a fun fact that I read recently. Yeah. According to Harvard Business Review, with more wealth generation for women due to Asia's economic boom, it found that women are increasingly controlling the deployment of assets. And it goes on to say, while it's widely assumed women are more risk-averse than men, yet in Hong Kong and Singapore, women are as likely as men to be more comfortable with a more aggressive portfolio allocation. Without further ado, let me introduce our lovely panelists for this session. Ms. Sharon Sim, on my left, is the co-founder and general partner at Purpose Venture Capital, an early-stage venture capital firm building sustainable and profitable tech business to deliver on profit with a purpose. She also advises family offices and private equity firms and is a board advisor to Ares Investment Management. And to my further left is Serena Wong. She is the head of advisory at Kamet Capital Partners, a professional multifamily office to new economy founders in Asia. She delivers the firm's services across investment management, wealth planning, administrative services, and philanthropy to some of Asia's most innovative entrepreneurs. Myself, I'm Audrey Lam. I'm delighted to be moderating this session. Let's get warmed up by sharing a little bit more about yourselves. Maybe Sharon, yourself, and Serena, you're both from you started off in large established financial institutions, and you've moved on to starting up your own venture capital and yourself leading a multifamily office. Maybe Sharon, just share with us quickly what drives and motivates you.
Thanks a lot, Audrey, for the introduction, and good to meet everyone here. I think what drives me and motivates me, I've spent 20 years in the industry, right, working at different capacities, capital markets, wealth management, and also in VC. I think what drives me is always a sense of being curious about markets, curious about businesses. I always ask the whys and the hows of how businesses work. I think financial markets fascinate me in the sense that I always wonder, right, how assets are priced in a market. And also I think observing how capital flow affects the real economy. I think those are all very big trends. And for me, the market is always evolving, always changing, right? So there's never a dull day in the office. So I think that's what keeps me very engaged throughout my day. But also, I think, if you don't mind, I will share a personal investing story, right? Because I started investing in equities at a pretty young age when I first started as analyst at Goldman. So I think those were, crazy times, the dot-com bubble, and everybody was, jumping on the bandwagon, right, investing in dot-com and tech companies. So myself, being a young person on the desk, I got caught up. I invested. And suffice to say, a year later, the company went bust, right? So it was a very personally painful and also, I think, costly lesson. But I think that taught me about really thinking through investments overall and also understanding the companies that you're investing in. And I think more importantly, knowing yourself as an investor, knowing when to cut your loss, right? Knowing when to change your investment thesis on the stocks. So I think that was valuable for me as a young person, but that didn't stop me from investing. So I went through various investment cycles. I've gone through, the Asian and Chinese equity market booms, the real estate markets as well. So I think it's a journey that we have to be engaged all the time throughout cycles, right? So and to learn from our mistakes and be curious about what you're investing in.
Thank you, Sharon. And Serena, yourself?
Yeah. Hi, everybody. I'm Serena Wong. I'm from Kemet Capital Partners. Thanks, Audrey, for having us, and thank you, Maybank. It's a real privilege to be here. I love to see this table here because, like, a lot of women here, like up front, like, yay. I'm Serena. I've worked across different aspects of the financial landscape here. I started at a sovereign wealth fund, the Singapore Sovereign Wealth Fund, and then I transitioned to investment banking for a good number of years, business school, and then private wealth. And when I left a large American bank I was the head of a market, and then I transitioned into the family office space in 2018. So I think the lens is fairly wide and comprehensive, but I think the intention was always, and I think what was enjoyable was always working with individuals and families, especially from the region, as they try to unlock and access, a lot of the financial institutions and the landscape here. So a little bit by way of background. I've also worked across different regions, definitely, here in Asia, Singapore, in Europe, in the US. I see myself as very Asian, definitely Singaporean, but equally sort of at ease across cultures and around the world. And I think that's been sort of something that's been very helpful throughout the course of my career. And as I work with different families, and increasingly families are also global in nature. So I know that I'm here, flying the flag for family offices in Singapore, but by no means was I a visionary when I transitioned to this space. When I left banking in 2018, I think the phenomenon of rising Asian wealth, and particularly rising North Asian wealth, was already very much evident, right? So I think that wave continues to be strong, and I think where we see here in ASEAN and also in Singapore is that we're also coming to the maturation, the coming of age, coming to market of that first wave of Asian ASEAN companies, startups, growth firms, and increasingly, that force will be strong. So I think we are in exciting times.
Thank you, Serena. I think that's two very brave and experienced ladies here. This morning we had a great session. We talked about the macroeconomy, we talked about the US, Russia, China effect. How does a slower economy, right, coupled with rising inflation, affecting your and your clients' investments objectives? Maybe, Serena, we start with yourself. With more realistic valuation of tech stocks, do you see a change in your clients' views about investing in tech and private equity?
Yeah. So, I think that change happened fairly quickly. I think the warning signs were always there. I think, up to last year, we were in a high growth, low inflation environment. And, this year that's really flipped and switched. We're in a high inflation, low growth environment, post all that recovery, that was generated with the pandemic. And then now, with the Asian sort of crisis, or different asset class falling in tandem, particularly in Asia last year. I think this year has been especially challenging. So I think that's the phenomenon that we observe. What we speak with our families, and certainly within our teams and with clients, is this whole concept of MMT, or modern monetary theory. Initially it was just kind of like a catchphrase, but I think the phenomenon is very real right now, because governments are they are in an environment whereby they can almost print in an unlimited fashion, right? What this means is that it has pushed asset prices up, but we are really borrowing from the future to really address or finance today's problems. So I think that is something that we've been, as investors, all of us here, we've been spoiled by the very investor friendly policies. So with that comfort blanket sort of being yanked and pulled from beneath us now, we are in uncharted territories and waters. But we are in this together. And then for all the investors and clients, I think enjoying your lunch right now. If any advisor comes and tells you that they know what's going to happen for your portfolios, I don't know, next month, end of the year, I think you need to be very, very cautious because we don't know. Yeah, we don't know. I think what in the family office seat that I get to be in, we're very fortunate because we work with Asian families. And I think Asian families, we recognize, the importance and the rise, or the really Asia having a very dominant seat on the investment landscape these days. We also embrace change and innovation. So that that they give us that the ability to manage according to that. And when it comes to investment strategy, what we're doing really is to continue to be that stable hand, the advisor to families. We also see the rise, and the potential in Asia for the long term. But because we are invested in the long-term secular growth trends, technology, consumer, healthcare, what this means is that yes, we will have that long-term, current pushing, but in the short term, where we are now today is there is definitely and there will be bouts of volatility that we need to address, which means that this risk management that's been sort of out of fashion, not so sexy for a long time, that is really the center of conversations with families right now. And to be honest, like risk management is hard to do on our own, or as investors, it is something that we, I think, need to be handled professionally, and that's where we are with families. So trends have changed indeed. So risk management is more important now ever than before. And then when it comes to investment, Audrey mentioned technology as a very strong growth trend. Yes, but what it also means is that we need to be particularly selective, both public, private markets, and also it's going to test our patience in terms of capital deployment.
Sure. And Sharon, how has the sentiments in the public market affect the private market?
Yeah, I think as we all know, the last 6 months has been extremely volatile, right, for the stock markets, especially for tech stocks. And as Serena has alluded to, that the whole dynamics, the whole paradigm has shifted, right? We're in a different macro environment. We have, rising inflation, rising interest rates. And for once, I think we are now without the support of central governments in terms of quantitative easing. So I think this is a real different ball game, right? I think for the listed market. But also, I think looking at things in perspective, right? I mean, the Nasdaq, as we know, has done poorly, but it's actually the worst or the third worst drawdown the Nasdaq has seen in the last 20 years. So that's actually a very big move, right, in terms of share prices. But also, more importantly, if you look at the stocks themselves, 60% of software, internet, fintech stocks are now below the pre-COVID 2020 valuations. So that means that almost 2 years of price appreciation has actually been destroyed, right? And this recent drawdown. So the impact is quite massive, especially on valuations, right? So I think the financial markets, right, are a very good barometer of the real economy. So as valuations for the listed market compress, we can expect the valuations for the private investments, private equity, venture cap, early stage startups to also reflect a new reality, right? And we're seeing that already happening in terms of new valuations, new term sheets being adjusted. But I think besides just the valuation, I think what's important for the private markets now is really points that Serena has mentioned, right? Capital used to be very cheap, used to be almost free, but now capital is expensive. So how are businesses going to evolve, right, and adjust and adapt to a rising rate environment? I think no one has a perfect answer. All of us are trying to figure this out, right? And I think that's what makes investing so exciting, because we don't know what's the real outcome. But I would say we're in the first phase of adjustment, right, for a lot of companies, early stage companies particularly. It's a real test of the business model, right? And also I think it's a real test of profitability. Which brings me to, I guess, the second point, right, which is also the real backdrop, meaning the macro itself. We are seeing slowing consumer demand, right? We're seeing supply chain constraints all over. We're also seeing very uncertain labor markets conditions across the world. And now we have a war even. So I think all these are very much factors that businesses have to adjust, right? And I think the long and short of it is that the next few years is going to be more challenging, and therefore valuations as well have to readjust to the new realities.
Okay. So term sheets are getting adjusted but not pulled, right? I think you're still expecting to see activities getting done, deals getting done, right? But Serena, I mean, how are you, supporting your portfolio companies? Is there anything that you're doing actively to support your portfolio companies?
Yeah, so Audrey, you mentioned, especially on the private market side, our term sheets being pulled. I hear that they are. Personally, I haven't seen it in the companies I'm evaluating or our portfolio companies. But what I've personally experienced and what I'm seeing now, this week also, is that, just normally we need lead investors to come in to lead the next round, to price the round for other investors for companies. And I've seen definitely, the delays, a bit of the dragging of the feet. I think lead investors, probably some of them are sitting, in the audience today, and I mean, you're wise to it as well. You're hoping that, perhaps with time, multiples, and the price that you pay, could be adjusted downwards with some time and with some patience that we also mentioned. So that's definitely happening. Then your next question is around what are we doing? So within, sort of the community of investors or GPs or LPs that we are in, what we're seeing is that existing investors, when they are strong, they can step in. And these are previous rounds leads, or these are companies who have committed to being with good, investors who are committed to being with good companies for the long term. So they're stepping into bridge rounds. They're stepping in to provide either sort of equity support or even financing support, really to help companies bridge. Because actually, if you're a strong business, now is a great time to build, right? And now is a great time to get ahead of competition. So if the ARR is trending, in the right direction, if the use of funding is productive, meaning that maybe it's an acquisition, or is to kickstart some growth that was put aside or pulled forward, maybe. I think those are all reasons that lead investors like to hear and see, and to the extent it's possible. And actually, there is still capital in the market. They're willing to step in. So I'll just give one example. For example, in April of this year, one of the companies, the portfolio companies that we invested in, is a US SaaS company. So it's an MSP, so it's a managed services provider, or what do you call it, cloud marketplace. So the company raised almost 200 million in April, and April was after Ukraine war came in, China, US, fighting, dragging each other into some geopolitical situations. The oil environment is unstable. So even with all this sort of landscape and backdrop, the company raised 200 million. And it was led by SoftBank. Even after SoftBank said, all Vision 2 funds, all the companies, you're on your own, we're not adding. So clearly there are still, jewels out there that investors, are ready to sort of step in when needed.
Okay. Anything to add to that, Sharon?
Yeah, I would like to actually chime in as well. I think on Serena's point about this is uncertain times, but doesn't mean that the deals will get pulled per se, right? So I was at a venture capital event last night, a dinner, right? So I think we have in attendance some of the key VC founders, right, in Singapore. I think the reality is that actually Southeast Asian and Indian-focused VC funds have been raising money quite a lot this year, right? To put things in context, I think it's about 3.1 billion US being raised in 2020 so far, right? Compared to almost 3.5 billion of last year. So definitely there is a lot of capital, right, sitting here, right, looking to deploy. And I think the point is, we do see a lot of investors coming to us, diversifying away from China, right, given the headwinds that we have seen so far. So definitely there is a real allocation of capital to Southeast Asia and to India. So I think my point to add is that valuations, as we mentioned before, will be more realistic. But I think it doesn't stop deals from happening, because reality is the capital raise has to be deployed, right? So I think the VC funds are very proactive, like looking for new investment opportunities as well. And I think what will happen, this is my personal read as well, is that the term sheets, or at least the fundraising process, will be extended, right, from start to the beginning to the end. So the timing wise could be obviously delayed in some cases. And also, I think valuations being more realistic. I think that's the main thing. I think value creation is what the VC funds want to know. They want to know what's your path to being profitable, right? Very important. And also, I think the mentality that of growth at all costs, right, is coming to the end. So I think it's all very healthy, signs for the industry, for the VC space, right? We are seeing a realignment of capital, and we're also seeing a lot more realistic views around valuation and growth. So I think that's my add-on to Serena's point. And also, I think from personally, when I advise or talk to our portfolio companies, right, I think we all know this is a very difficult environment, and the advice to them is always to firstly continue raising capital. Right, raising capital is never an easy process, and I think for an early stage company that doesn't stop, right? So even if this environment, when things are very challenging, I think the founders or the VCs also have a different perspective. So I would say to them, to really go out there, explore your investor list, think outside the box. Go for strategic investors who can actually help you open up different verticals of businesses. Or as Serena has mentioned, right, look for family offices where I think the investment horizon could be a bit longer, right? And also I think the commitment to participate in subsequent rounds of fundraising is going to be very important for the startups. And I think the next 3 points I want to, I will tell them is really to look at your business model, right? It's all about cash flows now, right? Reevaluate your business, right? How do you turn a profit? How do you pivot your business? Thirdly, cut costs, right? Never easy conversation, but I would say is, we have to think proactively. And sometimes it's a painful decision, but rather the decision be made quickly. And I think the lastly is always the communication, right, with not only investors or shareholders, but with your team. Because I think this is where morales are shaken. I think people are very uncertain of future growth. It's important to hold the team together. And also, I think to make sure that your service providers, your suppliers, all your stakeholders are aligned with you. So I think there's a lot we are doing, right, to kind of communicate with our portfolio companies.
Well, I keep reading about a lot of new family offices setting up in Singapore, the latest being Li Ka-shing's Horizon Ventures. And I think just last week, MAS announced another 100-odd additional family office license. Maybe Sharon, what's causing this flurry of activities in Singapore?
Okay, I think, the numbers are quite astounding, right? So I think the numbers are, we have 27 family offices in Singapore in 2018. I think last year we have almost 450 family offices being set up and registered in Singapore. So I think there's a huge growth. I think the reason is something we all are pretty aware of, right? Singapore is a place where you have a very good tax regime, very favorable. Also, I think it's a place where most families feel very comfortable doing businesses. But I think more importantly, after the global pandemic, right, we have seen Singapore being a very safe haven, a safe harbor for a lot of families. So I think that kind of changed the perspective a little bit. But in my view, also the introduction of the VCC regime by MAS in early 2020 really set the tone and I think the foundation, right, of putting Singapore as a hub for fund management. So I think that gives Singapore the additional competitive edge when it comes to, encouraging family offices to set up base here. So that's my point of view.
And Serena, if I asked you to be bold, to foreshadow, how family offices will grow in Singapore, how do you frame the future of family office in Singapore?
I grew up in a bank, so when they ask you to foreshadow anything, you kind of sidestep the question. But I get your point, Audrey. So I will, attempt. right? I think first of all, to concur with my fellow panelists, Sharon, I totally agree. We see a lot of families step through our office, for sharing, for discussion. And I think, first and foremost, the hygiene factors of being located, set up in Singapore, domiciled here for any investment holding companies is like bar none. So I think, the families are convinced of that. So then when they come here, the question is always like, what do we do, right? Because it's easy to set up, but to first of all put in place a team, a strong team that understands, links up with you culturally, can navigate, the financial landscape, can speak with government agencies. That's a lot of skill sets, I think, to have and to rest, and what tends to be a very small niche team or a SWAT team, right? Because that's what family offices tend to have. So, if I were to be bold and, your question is around, what would it look like and how would it develop? I think, first and foremost, we need to develop that talent pool and the growth of talent pool here. Because I think gone are the days where, a family office is a relationship manager or CFO stepping out from either OpCo or a bank, and, they try to pull together a team and do according to the wishes of the paycheck and matriarch. I think those days are probably more behind us than ahead of us. What you will see, and I think what we'll see here in Singapore, and in order to compete, with the Londons, the Genevas, the Zurichs, the New Yorks, the Hong Kongs of the world, is that talent pool, meaning both buy side, sell side skills, and generalist skills, and some the ability to build relationships, affinity with families, and to be sort of nimble as the environment grows. I think anybody with that kind of skill sets, definitely reach out, or just reach out to a headhunter or somebody, because you are super in demand. And if you speak Mandarin, that's an extra kicker for you. So I think that talent pool needs development. What I think personally very curious about, and what I really, really want to see, is that, in the US, when we think of family office, there are marquee names, right? There are the Rockefellers of the world, there are the Bessimmers of the world. In Europe, you have the Rothschilds, Caledonians, many, many. But I think what we will see in the next 5 to 10 years here in Asia is that rise, of some groups or some families, to lead that charge and be that, fly the flag for family offices and be that reputable name, global in field and in portfolios. I think that kind of marquee representation is something that personally I would love to see for our region.
Thank you.
Maybe one last point, I think, around the rise on the end, right? The number of family offices here, I mean, tremendous. There could be, the numbers change, depending on who you ask, and the MAS never really clarify, exactly how many are single family, how many are multi, and there are lots also of other independents of the world. But the trend that we see is that in the US, even your Rockefellers, they grow from a single to a multi-family office over time. It took them 70 years, right? Because in the 1900s, it was set up to service the family. In 1970, they opened the doors to third-party investors and capital. In Europe, I mean, the Rothschilds are a little bit different because they listed it as an investment trust so that there is additional capital coming in. There's also secondary transaction of the underlying portfolio to create the liquidity pool. So I think likewise in Asia and here in Singapore for sure. I think that evolution from single over time. If you're successful, if you can retain, if you can hire teams into multi-family office, and then that into that reputation flag bearer for Asia. I mean, that's really how I would like to see the trend develop.
Okay, I think that bodes very well for Maybank as a group, private banking and our prime brokerage business. I think the growth in family offices bodes very well, as we hope to service more of them as well. Okay, now professional investments is still fairly male dominated. But I think in the recent years, I don't have the statistics, I don't have the numbers, but I'm observing more women, right? And it's been accelerating in the recent years as leaders and decision makers in VCs and family offices. Maybe Sharon, is that real in the first place? And I mean, are we seeing this increased participation of female investors, especially in family offices?
I would say yes. I think I'm seeing more senior females, right, in various roles, especially in investing across, right? So it's wealth management, definitely, also in family offices, as you mentioned. And I think it's because I think coming from an investment banking background as well, I think over the years we've seen more females getting quite comfortable with leading teams, but also I think investing, right? So I think the fact is that why are females maybe better suited to a family office setting? I would say that for me, it's actually the way of investing. I think the way female look at investments is a lot more nuanced and balanced. And I think that brings a different dimension, right, to a family office setting. I think one of the recent studies I've came across from Fidelity, right, I think women investors outperform men by 0.4% over 10 years, right? It might sound like a small margin, but I think over long periods of time, that makes a difference.
Must compound over time.
Compounded, of course. Right. So I think it goes to show that females are just as good, if not better, investors than men. And I think that's why we're seeing more female participation. I think for me, I'm always curious, why do we see this outperformance, right, in terms of females versus men? And I would say it's actually the way we look at our investment process. I think females are more thoughtful. I think we are more, we look a lot more into the research process. We look at the investment thesis. And I think we are also more patient. So I think we don't trade as much or trade as frequently as men. And as we all know, right, that tend to land to a much better performance over the long run.
And
Maybe I'll just add one point,
Yes,
Audrey.
please.
Yeah, I think in addition to sort of the staffing or the office dynamics in the family office, what I've also seen and I've also spoken with personally is that there are actually more women owners of wealth. So there may be also a few clients here sitting over lunch, and these women are decision makers for ourselves, for yourselves. But you also make the decision. You also hold the purse strings, for the families as well. So there is definitely an increase in the number of these women decision makers. And the traits that I've observed, learned, and really tried to extract from them is that they are actually. I think Sharon mentioned that patient and analytical. But I think when you're in that sort of when you're the owner of wealth, what I've observed also is that they're actually quick decision makers, right? They are curious, they're not fixated to any point of view. They're open to listening to your advice, but they have that intuition and they know where to go with it, and they are very quick to make decisions as well. So that's the sort of really more recent dialogue and observations and meetings I've had.
Yeah, and if I can just expand on that, right? I think definitely female entrepreneurs, female owners of wealth, and I think that the way they look at wealth or wealth creation is actually more long term, right? I think they are more ready to stay in the investment much longer. As Serena said, they may have done a lot more research, investigation in what they're investing. They can make decisions fast, but they also stay in the investments much longer.
and Serena, now that you have the autonomy to run or lead, a multi-family office, what are you doing differently to encourage diversity, right, in your organization?
Yeah. So it is true that it is more autonomous in a smaller organization, but I feel that personally for what I've done or what I'm doing is actually no different than when I was in a larger, more structured organization. I think one is really hiring more women, hiring more females, especially in investment roles, especially also client-facing front office roles, right? Because I remember when I started where I am now, I was the only one. So I think I continue to do that. And two, I unabashedly have women-only events. So I will have I've organized sort of like lunches in the office and all that where it's really an environment whereby it's a safe environment. Really encourage that looking out for each other, that support for each other, and also want the guys to see that there's something that you cannot join. Sorry. And I think third point is really leading by example. I always speak up at meetings. I always speak up at management meetings. Because first of all, I'm also the only female there, so making sure that the view is represented, and I think being that very vigilant guardian of like whenever there are these what we spoke about, the NPTs, the non-productive work around non-productive tasks, like taking minutes, like organizing, offsites, year-end parties, and all that. Like invariably, it's going to be assigned to, the nice lady or hardworking, lady in the office, and that's where I go like, no. And I think that's why at CAMET we have CAMET Experience Team. It's a team of both male and female. If it's your first year joining, you're naturally in that team, and then we rotate out. Just really, because you have to be very vigilant about these sort of little habits that slip in. Yeah.
Following on from that, I know both of you have recently launched Women in Family Office. Maybe just a quick share. I mean, this is where there's no men allowed, right? Just a quick share of the mission and why you set up this network for women investors.
Yeah, sure. I think Women in Family Office is actually a private network. Essentially, we're trying to encourage females to collaborate, right, and to share more. And I think the reason why Serena and I are so excited about this is because I think we strongly believe in a few things, right? To build a community for like-minded professionals, women. Secondly, I think we're all very committed to grow and to develop talent in the industry. As we mentioned before, I think the talent pool needs to be broader and deeper. And also, I think lastly, more on a personal note, right, to keep ourselves accountable to our own journeys, be it in investing, in health, and just growth of our career. So I think it came around quite organically, right? There are 6 co-founders, 6 females, and it came about because we were actually trying to arrange a lunch among all of us. And so it got to the idea where we all have very, unique experiences, right? We're all females in the industry, and also I think we have a voice. We want to, share our message across. And I think Women in Family Office is a safe space for us to support and to share our experiences.
Sharon, you should tell your story about how you wanted to be in the co-working space and what happened.
Oh, okay. So it's a personal story. I think there's this perception that maybe investments or investing, especially in private space, being very male-dominated, a bit of an all boys club, right? And a lot of females feel excluded from that. And my experience is exactly that, right? Because I have a group of very close friends, ex-colleagues, so ex-bankers, traders. After retiring, what they did was they set up a little club of their own, right? They have their own co-working space where they come in every day, they talk shop, they trade, share ideas. While I was
sometimes,
yeah. While I was invited over quite a few times, right? Social setting. I was never part of the group, right? So I asked them, can I join? And I think the answer was no, sorry, it's only for boys. Okay. So I was a bit shocked, but I do get it sometimes. But after that, I think my point being is that rather than us begging for a seat, right, I think it's time for us to build our own table as women. When it comes down to charting our own investment journey, I think we take the lead, right? And I think we find females, friends who are also aligned to the same vision. For myself, I continued my investment journey, right? I started a VC firm myself. I've been very active in female angel investing clubs. Also, I think now with Women in Family Offices, we can reach out to more females in industry. So I think it's an experience that you have to create your path, your own journey, and having a community, right, with Serena and a few other co-founders, that really helps us. Right.
Thank you. Maybe now we try and see whether there's some questions for us. We take 1 or 2 questions. Okay, Sharon, a question for you. What do you think is holding back more females from investing, and what's your advice to them?
I think as I've shared with some of my stories, right, it's really the confidence, I would think. I think the perception that maybe females are not as good investors, or the fact that we don't take as much risk. So I want to address those points, right? I think I've already talked about female investor performance being much stronger in the long run. But also I think that the point about being risk adverse, I don't think we are. We may take less risk in terms of investing, but also I think we are taking the right amount of risk. for the investment we're embarking on. So it's a very different perspective, right? I think we make decisions quicker somehow if we have the information with us. So I think it's a balance of feeling more confident about investing and exploring, right? Just go out there, reach out to your friends, your colleagues. There's so many female angel investing clubs out there. So it's very much proactively going out and searching for the right community for yourself.
Yeah, I'll add to what Sharon said. I think I think there are fundamental differences between men and women, right? I think we've highlighted a lot of the good sort of aspects. I think what I do want to call out, a point I want to call out, I think for ourselves is that as women, and this happens to me all the time, women have a lot of internal dialogue and a lot of internal chatter, in our minds, and we have to remind ourselves that thoughts are not facts. Okay, so we may have all of this like internal, but nobody is hearing it, and like it's fine that we're processing, but thoughts are not facts. Because I was reminded of this because Audrey and I were having a chat, and we both realized that we have been very productive and successful in our careers, but for the same outcome, which is winning deals, helping clients, build helping the banks and all of that, for this same outcome, we were given very different feedback, right? For Serena, it was, Serena, like, good work, but, please, we hear from, colleagues and all that, you're very aggressive, please tone it down, right? Well, the same outcome, Audrey was also saying that, Audrey was told, oh, you've been very productive, done very well, super hard worker, but, you're very soft-spoken, please speak up. So what I don't get is why, for the same outcome, the advice or the feedback is so different, right? I think what Audrey and I were trying to be is really just be ourselves. And I think, that's it's unrealistic otherwise. And I don't think that, the same feedback would be given to our male counterparts. So I think, that I think for advice or just, awareness is really that cut that chatter, recognize it as chatter and then like just move on from that.
That's great. Thank you. Maybe one last question, right? Okay. I think this is tying to the prelude that I had earlier. Are women investors more risk adverse? Sharon or Serena? Sharon?
My point of view is we're not, right? I think we take risk, we view risk differently. I think we take the appropriate amount of risk, right? I don't think women are, as investor, we don't jump on the next shiny bandwagon, right? We don't chase after the latest and the hottest asset class. I think we take our time, right, to do our research. I think we need to understand the whys and the hows of the investment, and people will view that as being risk adverse, but I think that's actually risk management, right, if you ask me. So I think we look at risk very differently, and because I think females really invest for the long term, I truly believe that. And I think we all know that the female lifespan, right, is longer, and therefore I think we plan our investments for the longer horizon as well. So I think once we make a decision, we are less likely to change our minds, we're less likely to, I would say, even question ourselves. So I think we do hold our investments for a much longer period of time. So it's a different risk assessment, right? When you look at time horizon, when you look at the risks you're taking for the amount of upside you're getting. So a lot of men, I think, get excited, right, by new trends, and I think we view risk quite differently. That's my answer.
Yeah, I'll add to that. So
Yeah.
comprehensive answer. I just have a couple of additional points or insights to that. And I think I think the risks. I like the fact that just really rephrase risk averse to risk management. I think that's brilliant. But I think the other point is even when we do well, I think we don't go out there and talk it up and get all the accolades, pat on the back,
Maybe
have celebratory drinks and all that, right? So I think that is a different, not good or bad, it's different. But I think that translates to, I think, a lot of an advice that I tend to like to share. And I think, there are a lot of business owners, managers here. And I think, please also take that away, because I think the way that we're brought up, especially for women, like we will never veer on the end of being boastful or coming across as, hard selling. Experienced this, in business school, experienced this in an American firm, whereby my risk is of underselling and underrepresenting myself, never of over sort of reaching. So I think that is a very practical advice that or just something that I feel very strongly about, that I always share with my colleagues, especially if it's women rising through the ranks. I think critical.
Thank you, Sharon. Thank you, Serena. That was really insightful and bold and beautiful women who are framing the future of investments. Thank you.
Thank
Thank
you.
you.
Thanks.
Thanks, everyone.
Thank you, Senga. Over to you.